Have you ever wanted to know about paying your family members in your business and if you can or can't and what the rules are? If so, this is the video for you to watch. I'm recovering paying your spouse, paying your kids, and paying your grandkids. Hopefully, I'll try to keep it to about 10 minutes. If I go over, I'll go ahead and do a second one in the following week. So, and this is a strategy, just for you know, I am a Main Street certified tax advisor. I follow Mark J. Kohler's tax teachings on how to help our clients implement this. So all of this comes, a lot of it from him. So I'm just going ahead and sharing what this one strategy is this week. And I try to do these strategy teachings every Tuesday. One for that I can send them to clients who I can explain it to them instead of um, talking with them, like, I'll just send you the video. I've already done the video and taught on it. Or for potential new clients, we're like, I want to do that. I want to work with them. How do I work with them? Well, when you book a discovery call. So if you are already like, yes, I want to book a discovery call, the links are below. So that's the first step in working with this. Okay, so we are going to explore ways to involve family members in your business again, paying your spouse, adult children, minor children, and grandchildren. And I want you to understand the benefits and potential pitfalls for each approach. First one we're going to talk about is paying your spouse. Okay, I don't recommend paying your spouse unless it's for two reasons. One, we want to fund their 401k, or two, we want to do an HRA. That's a different tax strategy on health and how to be able to write off your health. I've done a video on it already. You'll find it. So a lot of people are like, oh, I want to pay my spouse because I want to fund their Social Security. Wrong. We don't want to do that. It's actually better if you have, you're a higher income person, instead of paying your spouse, say 30 grand or whatever, just to get them on payroll, it's normally better, and we can run the numbers, but it's normally better if you were to die and then your spouse will get the spousal Social Security um, when you die. They'll get yours instead of theirs, right? So if you're just going to do it to fund their Social Security benefits, it's normally not the best thing to do. Okay, what are the tax implications? So paying your spouse typically doesn't save taxes and may cost even more due to payroll taxes, especially if you're getting over the Social Security threshold. I can't remember the exact number, but it's like 164,000. Like, so if you're already at 164,000 for the year, and then you're paying your spouse, well, they're going to be paying Social Security and Medicare taxes up to that amount now too. So if they're not working in the business, not doing anything in the business, don't pay them unless you are trying to like do a 401k for them, or we need to pay them for an HRA strategy. Okay, so another thing I want to say is um, let's talk about paying kids, okay? So if your kids are adults, they're over 18, they're 18 or older, we want to go ahead and pay them as a regular W-2 person. We can also pay them as a subcontractor, um, but we need to follow the rules. So if they are, we need to treat them exactly as we would anyone else, right? So if we need to figure out if they're employee or if they're a 1099. So employees they're set, they have a set rate of, X amount of dollars per hour. You tell them when to be to work, um, what to do. They're using your own equipment. Like that's all W-2s, and they should be paid as W-2s. If you just give them a random project, hey, go ahead and get XYZ done, and they can set their own, hey, I'm going to charge you X, like they can set the rate of how much they're going to get paid like they would a regular contractor. Like say you're in construction, you need to sub out the concrete. Well, they're going to tell you how much it's going to cost for them to do the concrete for you. So if it's that type of a relationship, then they need to be a 1099 person. And they will have to pay Social Security and Medicare on their 1099 like any other contractor would, doing a Schedule C. So there's things that you need to know, and this goes for if you're hiring your spouse, if you're hiring your children, adult or minor, is that if you're going to hire them as a W-2 employee, they need to fill out um, an I-9 and a W-4, I believe it is. Whatever the employees are that you normally would hire, the forms that they have to fill out, I believe it's a W-4 and an I-9. Um, and they have to have hours, like they have to have legit jobs that they're doing for your company. You can't just pay them $1,000 a month to do nothing. Like it's you're paying them because they're legitimately doing something for the company. So they have to have, this documented. If they're doing a 1099, we need to get a invoice from them once a week, every 2 weeks or once a month, however often you're paying them. We need to have an invoice from their company or as them, and we would need a W-9 from them. If they're a 1099 contractor, we need a W-9 from them, and and then an invoice. And then if they're going to be a W-2 employee, we need to have, their hours and what they're working on. This is how you get this to hold up if you get audited in court. Okay. And again, we need to follow the federal and state rules to avoid audit risk. So whatever the state rules are too, like we need to be able to do that. Okay, so paying kids under the age 18. So say we have minors out there, and I'm talking on a federal level. Each state is different. Like California, you can't hire anyone under 16. Um, I'm here in Texas, it's pretty laid back. They can't do anything very risky. Like they can't be working in manufacturing or stuff like that. But so we have to call the whatever state you're in and find out what the rules are for hiring children. So again, if we're going to hire the children under 18, again, I would hire them as a contract laborer. That would be the easiest thing because you don't have to pay Social Security or Medicare taxes on them. There's different rules though. So this only works if you own the business. And what I mean by you own the business, um, if you file your business on a Schedule C, like you're a sole prop, um, it would work then. If um, like if you have a partnership and the parents own the business, like it would work for that. If you have an LLC where the parents own the business, it would work for that, where the children do not have to pay Social Security or Medicare. If you have an S corp and now you're being taxed as a corporate entity, or if you have a corporation, you don't own the business, like you're not the direct owners. So the kids would have to pay Social Security and Medicare. So we'd want to have them set up as a W-2 employee. And again, they'll need to fill out the I-9 and the W-4 for a W-2 employee. If you have like if you're just a sole prop still, just have them fill out the W-9 because we're going to do a 1099 to be a contract for them. So if you have an S corp, basically, and you want to pay your minor children, we're not going to be able to save on the Social Security and Medicare taxes. And again, you literally have to pay the kids. It has to go in direct deposit into their personal bank account with their names on their bank account, right? This is how we keep it on the up and up for audit purposes. So what can you do if you have an S corp? I personally have an S corp and I pay my children. However, what I had to do in order to be able to save on the Social Security and Medicare taxes is I had to set up a management company. So now my husband has a Schedule C and he has a management company for me. And then I pay the management company So now it's a Schedule C, and then he pays the kids from the management company. And because he's a sole prop, that he pays no Social Security, Medicare taxes on that. So again, I need to have an invoice from my management company of, you know, what what they're charging my S corp, and then I pay them, and then he needs to have like a W-9 on file for the kids, and then he needs to keep records of what the kids are doing. So he needs to have hours, and um he needs to have hours and descriptions of what the kids are doing. But then and then so just for how it works is, so under the S corp, we now have a management fee income that we are paying to the over here. So it's an expense that we are writing off on our business tax return over here for the S corp. And then on the Schedule C, say we have, I don't know, $1,000 go into it each month. And then we also have $1,000 going out of it to pay the kids. So it's coming in as management fee income on the Schedule C, and then it's going out to outside labor as an expense on the Schedule C. So the Schedule C essentially has zero income. So he's not going to be paying any Social Security or Medicare taxes on this because it's essentially making no money during the year. And as long as we are doing everything correctly, making sure that we have policies, the invoices, we have the kids' hours documented, we have, timesheets, this will hold up in court. And then when if that we audited by the IRS, they're going to look at it like, oh, okay, you're paying the kids. They're like, okay, no big deal. There's bigger fish to fry out there than this. Just make sure that we're doing everything correctly. And then what we do is the C corp direct deposits the kids, so it goes directly into their accounts. So we have a tax deduction over here on the S corp. We're paying no tax on the sole prop, the Schedule C on your personal tax return, because it's all the money going in is going out. We're paying the kids. And then we have the kids. So we have this whole write-off right here. Then the kids are paying, have the kids pay for their own activities, have the kids pay for their clothes, if they're in school activities, haircuts, like whatever we would normally be paying the kids for, we can start having them pay for it with their own debit card and teaching them how to budget and how to save. And the best thing is that they will also have earned income now. The earned income allows them to have a Roth IRA. And I would highly recommend opening up all of your kids a Roth IRA. The Roth IRA, we can pay them, it's up to $7,000 or up to what their earned income is. So just for we can't pay them more than what they earn throughout the year. But we get to have a Roth IRA for them now. And they're such a low tax bracket, like they should be paying zero in taxes, right? But now all that money that's in there is growing tax-free. So when they get to 59 and a half, I know it's years and years away from now, they get to take that money out tax-free. And it's because they paid taxes on it at the very beginning. So it's a really great strategy. I'm going to go ahead and close this, and I'm going to do a part 2 next week. We'll start off with paying the grandkids. All right. Thank you. I hope this was helpful to you. Again, if you found this helpful and you want to start implementing these strategies, go ahead and schedule a discovery call. And then that discovery call will turn into a comprehensive consultation with me. We just want to make sure that you're a good fit with the discovery call and we get any questions answered that you have. All right. Have a good one. Thank you.